This is kind of, what Trump had going for him, if you would, from the start, and that he talked a lot about trade. He talked a lot about China. He talked a lot about things that were happening on a very global scale. And people were like, oh, okay, he's a business guy. He gets it, da, da, da. So he kind of hit the ground running with some of that. And look, from an economic standpoint, our country's not in a good spot. No matter what Biden and his sycophants are trying to tell you, the Bidenomics is not working. Of course, you've got academics like this guy, kind of a hack if you ask me. This guy is he's a business professor, whatever, at Yale. And it's kind of like whatever way the wind blows. He's kind of a consultant. He'll come in and tell you whether or not you're woke enough. Anyway, he went on that MSNBC show that's on at night where they just, can't love Biden enough, and talked about how great the economy is. And like Biden's the new FDR. Watch.
The new business creation is up the greatest ever, with up 30% over this past year and 50% growth in jobs. And who are those people we're hiring? There are people who were discouraged. We're seeing surging investment, as Jeff Zients pointed out. The new business creation is up the greatest ever, with the Infrastructure Act, the CHIPS Act have all been huge boons to the economy and celebrated at long last by Wall Street. It's just some pollsters don't seem to have it right. The same pollsters who predicted a red wave last fall have people confused. And some of that's just because of a manufactured malaise that I think some GOP cynics are marketing out there.
Well, yeah, there's that.
No. I'm sorry. Just take a look at the numbers. Actually, take a look at what happened on Wall Street today, if you would, please. Mr. Sonnenfeld, Professor Sonnenfeld there at Yale University. Just look at what happened there at Moody's. Moody's has downgraded 10 major regional banks. All right, that's a big deal. That's a big deal because we just went through SVB, right? Silicon Valley Bank, which nearly went under, nearly took the entire system with it. I was on the front lines of 2008. I can tell you, when these banks start going, you got yourself a real problem. That is what they call a systemic crisis. And the fear now is these regional banks, which are holding so much treasury debt, they have to. In fact, regional banks, they don't have a choice, right? Like when they have to invest your money that you put with them, they go out and they buy treasury bills. And the treasuries now have a very different portfolio picture than they used to have, because you see, treasuries are now paying upwards of 4%. The 10-year yield is upwards of 4%. It has to be, right? Because the Fed has to keep raising rates because they got to deal with all this inflation because everybody gave out too much money, really dumb stuff. But that's what happens. Government makes dumb, stupid, idiotic mistakes. Everyone could have seen this coming, and yet somehow, our whiz kids at the Federal Reserve didn't. And of course, nobody in government wants to see it coming because they just want to keep handing out cash. So we've handed out so much cash that we're now dealing with a real inflation problem, while simultaneously not having enough economic growth to generate the kind of response you need on the economic side. That means stagflation. So it really is like a return to the 70s in so many different ways. I've said Jimmy Carter 2.0. Here we are. Consequently, now, all of these banks, Moody's is late to the party with this downgrade, just like Fitch was with our U.S. debt the other day. But Moody's is saying, okay, these banks are in jeopardy. Well, if these banks are in jeopardy, then the entire system is in jeopardy. And again, just to go back, they're in jeopardy because they have to mark to market every single night and say basically what their books are, right? And they have to have a certain loan to debt ratio, and they can't basically, or they have to have a certain amount of liquidity and equity there on hand to meet any capital calls. Well, if they don't have those, they don't have enough money because their treasuries aren't worth as much because, hey, who wants 1% when you can buy a 4% treasury bill? Well, guess what happens? They don't have enough money to stay in business. And so if you have a lot of SVBs, this is exactly what happened there, out there, then how do we backstop that? It's a real question. And I think this is what Bidenomics is certainly missing. You just can't helicopter in money and expect that that is going to be the be-all, end-all, and that that is actually going to be the thing that changes your economy. No, in fact, that's going to give you the inflation that then you're struggling to fight. And that's where we find ourselves right now. So no, Bidenomics is not working. Hey everyone, Trish Regan here. If you enjoyed that clip, please do me the favor of subscribing to the channel. Just hit that little subscribe button right over there. Did I do that right? Not quite, but you know where it is. Subscribe to the channel, hit the bell so that you get the alerts, and I'll see you back on the show.